I'm Lynette Zang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer specializing in strategies. And what I've been watching and warning you guys about for a very long time is unfolding right now as we speak over at the Bank of Japan. I mean, they were after all the ones that introduced us to yield curve control, and I mean, they had so many alphabet soups, it's ridiculous. And they've also introduced the zombie corporations to us, which is now global. It used to just be in Japan, now global. So these are really not good things, but they're losing control. Let me talk about this for a minute. Okay, number one, grab my little laser pointer. Okay, so on Friday, I mean, this is so interesting, really. On Friday, the Bank of Japan sent yields soaring with a surprise change to the rate limit. You get that? A surprise change, something that nobody was expecting. Look at this. Now look, are they saying, well, we lost control? But they were losing control. That's why they had to change the rate I am losing it today. They had to change the range of the rates and allow the rates to go up even higher. The bank says more flexible approach will help sustainability. Yeah, will help them stay in power because they are losing that control. You could see what happened when they announced that surprise change to the rate limit. It went ballistic. Well, all right, big deal. That's over in Japan. This is here. But what it really does is it reinforces the market's loss of confidence in the central banks. And that confidence, especially when you're a con game, that confidence is everything. It's required. So what I'm hoping that you can see is that they are losing control. This is an indication of how close we are. What is this gonna look like as it unfolds? I got news for you. We do not yet know the global ramifications. Those are gonna come over just a little bit of time. But what happened on Monday? That's yesterday? It says, listen to how they make it so nice. Bank of Japan wades into bond market after YCC, that's yield curve control tweak, triggers yield spike. Well, they had to have known that that was going to be a bit of a problem. And you can certainly see how the yield has gone up from there. But the central bank makes their first unscheduled, thus another surprise, because they didn't like the way they got the reaction from Friday, but unscheduled purchases in months. Yield on the 10-year bonds had set a fresh 9-year high. Now look, everything is always going to go to its easiest place. So with the Bank of Japan saying, we're going to widen that interest rate band, that's where interest rates are going to go. Like, duh. Why was this such a surprise for them? Because I think, honestly, they're just losing control. Bank of Japan unveils surprise bond buying operation. So they don't know what they're doing, because by releasing that yield and allowing that to go higher, that says that they're tightening. But by going in and buying bonds, that says that they're loosening. So you tell me, they don't know what they're doing. They're throwing stuff up on the wall and hoping that something sticks. But to me, it looks like panic. What's it look like to you? To me, it looks like panic. And here's where I'm saying we don't know yet what those global ramifications are. Because as the Bank of Japan has kept interest rates super low, well, a lot of the money, the investors in Japanese investors have gone elsewhere. Here's the US, 50.1 trillion yen. Cayman Islands, 50.7 trillion. Spain, France, Italy, Ireland, UK, Australia, and everywhere else. So if the yields go up in Japan, the most likely outcome is that Japanese investors will sell what they're holding globally and potentially bring that money home. Japanese investors are the biggest foreign holders of U.S. government bonds and own everything from Brazilian debt to European power stations to bundles of risky loans stateside. So what happens if these Japanese investors start to liquidate those positions? Well, if they start to liquidate U.S. treasuries, I mean, that's kind of a problem, pushes interest rates up maybe even further than the Fed wants them. And especially at a time when the Fed is trying to liquidate their bonds into the market, and the Treasury is issuing trillions of dollars worth of new debt into the market. This is a big problem because the Japanese investors have been the biggest foreign holders. So this is going to have repercussions that we aren't seeing yet. This was the ignition. We're going to see what the outcome is. Japanese overseas holdings are larger than most G20, so that's the top global economies in the world. Their holdings are larger than most of those economies. Hawkish tone in Japan is all it takes to rattle global markets. Well, yeah, because the Japanese stocks drop, the yen gyrates after Bank of Japan tweaks yield policy, and they move to weaken allure of yen-funded carry trades. Wow, we're going to talk more about carry trades in just a minute. But pain is spreading across a number of asset classes as traders come to grips with the fact that the last major central bank to resist restrictive policies appears to be caving in. Japanese markets are at the center of various international trades that exploit its rock bottom interest rates, and bulls also worried about the repatriation, so the bringing home of trillions of dollars of funds should those rates in the Asian country start to rise. It didn't take much to reveal just how fearful global markets are about a change in Japan's ultra-loose monetary policy. So let's talk about the carry trade because this is significant. First of all, what is a carry trade? That is when you go in, traders borrow in countries with low interest rates like Japan, who's at negative interest rates, to invest in higher yielding assets. So that's why, frankly, a lot of the Japanese investors went overseas because they really couldn't get it in Japan. But they're not the only ones. This is a global thing where Wall Street globally will borrow in cheaper with lower interest rates and then invest that money in higher yielding assets. But we don't know if the liquidity is the same on both sides. And remember, there's also all of these derivative bets that are written against this. The surprise loosening by the Bank of Japan of its grip on bond yields Friday holds particular significance for emerging market currencies as Japanese investors are at the center of the carry trade, borrowing in countries with low interest rates to invest in higher yielding assets. Yen-funded carry trade strategies have outperformed those borrowed in dollars in all developing markets this year. Shocker. But understand that this is a surprise. So when they're saying the surprise loosening by the Bank of Japan of its grip on bond yields tells me they lost control. Hey, maybe I'm wrong. Maybe I don't know what in the world I'm talking about. Or maybe I do, since I was groomed for this moment in time. We have not felt this yet, but this is a tectonic shift. Remember, Japan has been absolutely instrumental in creating all of these other products that the central banks use to make things look okay. But they're also the owners of most of the debt and the stock market in Japan. And in the meantime, A $3 trillion threat to global financial markets looms in Japan. $3 trillion? That would be a flipping gift. It's the derivatives, those big bets that are based upon all of this, that are the real problem. And we can't see it. It's buried underneath until it's too late. Until it's too late. I do not want you to be a deer caught in the headlights. I want you to know what's happening. When you control a price and loosen the grip, it can be challenging and messy. We think it's a big deal what happens next. Yeah, but I'm going to read this guy's credentials because I love him so much. Head of BlackRock Investment Institute now, and former Deputy Governor of the Bank of Canada. It's a revolving door between Wall Street and the central banks and the governments. It's just a revolving door. But we can't see the real risks that are happening, but I want you to pay attention to what they say. When you control a price and loosen the grip, it can be challenging and messy. So what have they been doing with gold, spot gold? Because we know a rising gold price is an indication of a failing currency. So what they've been doing is holding it down. And it's like a spring, right? You hold it down, you hold it down, you hold it down. When you remove that pressure, then whatever it is shoots in a direction. So we saw the interest rates, they were artificially held down. Now they shot up. Scared the crap out of the Bank of Japan. I don't know why. I don't know what in the world they were expecting, but the same thing is going to happen with spot gold.